Hi, my name's Kirsten Foss. I'm a business coach for the spa industry. So if you've been following me for a while, you've heard me telling you to farm out your accounting and bookkeeping. Today, I want to bring up a caveat, and that is you want to hire them, but you don't want to just follow them blindly. So I have a story to share, and it's from a private coaching client of mine, and she's allowed me to share this with you. And it had to do with her being audited by the CRA and receiving a heck of a bill to the tune of $32,000. Now, it turns out that her bookkeeper that had been managing all her bookkeeping had been making consistent mistakes all over the place. Now, when I asked her if she would have been able to find those red flags had she been looking at her books on a consistent basis, and she told me that no, not all of them. In fact, most of them she probably couldn't have found, but there were some that if she knew what she was looking for and if she had been paying closer attention, that she probably could have seen some red flags. She may not have known for sure that there was a problem, but she would have been able to look at things and go, this doesn't seem quite right, and then ask the bookkeeper for clarification, which can often lead to figuring out what the problem is. I've personally experienced this myself with different bookkeepers that I've hired, and some of them I've let go, and it usually revolves around three specific areas. It usually has to do with gift certificates, series, and gratuities. Now, gift certificates are not considered a revenue until they're redeemed, but our industry is kind of quirky because we have services, we have retail, we have gift certificates, we have gratuities, and it's just not kind of your basic retail store, your basic or your restaurant. It's a little bit different. So those bookkeepers that haven't been worked with a spa before could possibly be missing this type of thing. So when you're armed with the knowledge of my gift certificates shouldn't be included in my revenues, and you get your profit loss statement back and you see that they are included in your revenues, you'd be noticing red flag, and asking your bookkeeper why they're there. The other piece is series sales, and they're very similar to gift certificates. They're like a prepaid. So again, they're not considered a revenue until they're redeemed. The last and final piece are gratuities. Now, our industry is notorious for literally the blind leading the blind for decades and decades, just following what you learned from your previous employer and they learned what they know from their previous employer, which leads to some really, really bad habits, and gratuities are one of them. Now, gratuities are considered an income for the employee, and if they're being paid on a credit card, the whole thing should be run through the business. So instead of the old way of doing it, where if it's run on a Visa, the tip is run on the Visa. The old way was we go into the cash drawer, take out, say if it was $10, take it out of the cash drawer, put it into the service provider's envelope. Then that was accepted. But the fact is it's not legal. If it's gone through a credit card, it should go through payroll and the employee should be taxed on it. Yes, you will be paying your source deductions on that as well, but it's the legal and right thing to do. So if you are looking at a profit loss statement and you just look at it and you think, oh my gosh, I don't even know what these numbers mean, it's time to start educating yourself so that maybe you don't have to know exactly how the whole thing works, but you do know a few pieces so that if something doesn't seem quite right, you're armed with that little bit of information that you can go to your bookkeeper and say, hey, how's this supposed to work? Because from how I understand it, this is how I think it's supposed to work. So just having a little bit of extra information will help you be able to make better decisions with your money.